Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-hosts, Mark Hanf and Nam Phan of Pacific Private Money and Patty Cohen of Compass Realty. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate. Give it during away this show. The certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Check them out. Today's trivia theme is general trivia. Patty, what do you got for us today?
Well, it's pretty amazing, actually. Since April 1st, since March 1st, May 1st.
Okay, let's try it again.
The more I use my brain, the sharper I am. Unless I use my brain. Anyway, so yes, since May 1st, the market has been on fire. And it's a lot easier to work as well because everybody that's out there is really motivated, the buyers and the sellers. And there's no open houses. You know, buyers and sellers both have to sign a form swearing that they don't have the virus, that they don't have any symptoms. They wear masks, they wear gloves, they wear booties. So there's less drama and there's more just serious buyers. And the escrows are much faster because people don't want to mess around. They don't want to mess anything up. They don't know what's going to happen tomorrow. They are just ready to go. So it's pretty darn exciting. And then I looked at, by the way, for example, I just took Marin County. We're doing the whole Bay Area, but I looked at what happened since April 1st till now versus last year. So in Marin County, a very small market, we've had we've had 194 new listings, 54 coming soon, and 135 went into escrow since April 1st. So a good barometer is to look at the relationship between how many on the market and how many in escrow.
It's interesting because you look at the Sunday paper and you don't see any open houses. So
no, there aren't any. We're not allowed to have them.
No, I know, but it almost gives the appearance that the whole real estate market dried up.
Exactly, like it's dead. Yeah. And it's quite
and Patty, you're mentioning, you're talking about Marin in the Bay Area. Well, and that is, it's happening nationwide. So Zillow came out today and said the bottom's already happened. So if you think you're going to get, you're going to buy houses for steep discounts in the coming months, that's not going to happen. And the Norris Group blog said the same thing. They've got basically home sales are picking up nationwide. So
yes.
And interest in homes and activity.
It's nationwide for sure. And in fact,
it's your typical supply and demand situation, not a credit bubble as we experienced in 2008.
Yeah. And in fact, I've got a graph here. Major financial institutions, Goldman Sachs, JP Morgan, Morgan Stanley, and Wells Fargo are all calling for a recovery in the second half of the year. And I have a graph showing.
Yeah, the radio audience can see that too.
Exactly. Wow. So, and in terms of prices, the escrows are faster.
Yeah.
The list price to sales price is tighter. I'm talking about this time last year. So April 1st until call it May 7th, whatever. Escrows are faster and the list price to sales price ratio are tighter than last year.
I wonder if that's maybe why the stock market hasn't continually crashed down, is because the investors are kind of seeing, maybe this is going to start recovering a lot sooner than we thought.
Well, I'm just talking dollars now and the rate, but let's get real for a second. Number of sales, way down. So for example, since April 1st, 138 sold. And I chose April 1st because as soon as this happened, there were a lot of escrows where people were bailing. And the contract did not, our CAR, California Association of Realtors contract does not provide for people bailing. And sellers were holding them to it. However, so there were 138 that sold since April 1st. This year, last year, it was 521. So,
wow. So
it's on fire, but yet it's the people that are playing are really swinging hard. And one buyer's agent said to me that he used the word panicking. Buyers are panicking. They are afraid they're not going to find a house. And sellers are in the game too.
Well, you've hit something on the head. There's two parts to this. When you read the papers in the coming weeks, you're going to see headlines that make it sound like the whole real estate market is crashing. They're going to talk about year-over-year sales and other activity being down in historical declines. Real estate 25% down or something. That has nothing to do with what most people really care about, which is what's going to happen to the value of my home, what's going to happen to the value of real estate in general in the Bay Area, in California, in the United States. And if I'm an investor who invests in mortgage-backed products, is my investment at risk? And so what we're saying now is, yeah, unit volume's way down. Well, duh. But you know what? The virus has created a number of new efficiencies that are going to continue on beyond this into recovery. And because of supply and demand, home prices, they've already hit bottom, if you could even call it that.
Gotcha. Yeah. Right now, the supply and demand curve are about even, but I do believe that if you're going to sell, now's the time, because think about it. Our absolute peak season, March 15th, is when it died. So it's going to come back. It's already coming back, but that's all the pent-up sellers from spring. And the buyer demand is going to get absorbed, and there's going to be more and more people selling.
All right, Patty, stay with us. We're going to cut to a quick commercial break here.
Okay.
First, I got a couple of easy ones and one that's not as easy. First trivia question is, of the 4 Beatles, who was known as the Quiet Beatle? All right, call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate worth over $100. Again, of the 4 Beatles, who was known as the Quiet Beatle? Stay with us. You're listening to The Best of Investing. We're going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Humph, Nam Phan, and Patty Cohen. First trivia question was, of the 4 Beatles, who was known as the Quiet Beatle? Anyone? George Harrison, that is correct. One of my quick mention here for Mountain Mike's Pizza in San Rafael. They are open for takeout and delivery. So how many of you people are sitting home going, I'm tired of cooking, I want to go out? Well, here, go on.
Right here.
Nice pizza, yeah. Mountain Mike's Pizza in San Rafael, 415-454-4300, or go to mountainmikessanrafael.com. All right, Nam, you wanted to ask Patty a question?
Yeah, so on the last segment, Mark was talking about a lot of efficiencies, happening because people need to alter their way of doing business. So I wanted to find out from you, Patty, you said things are moving a lot faster. Have there been new processes that have been implemented in, showing a home or, transacting, going through documents with your clients? I know DocuSign's been around for a while, but are there things that you've seen happen in the last, 30, 45 days to get a sale done that have staying power?
Yeah. Well, that's a great question. I mean, some people have bought houses without even going inside. I haven't seen that happen. I mean, I wasn't experienced that. But, people are wearing masks, gloves, and booties. And that's going to continue for a while. I don't know how long. The big question that everyone has is what's going to happen in the fall. But putting that aside, I think that there's going to be less tire kickers out there because so much is available online. You can see a video, you can drive by. There's a lot you can surmise from all that. Rarely do you get surprised. I mean, a lot of times actually you do, because realtors tend to like the photos overpromise and overdeliver. But I think there's going to be a lot more respect to the homeowner, even though so you will have 50 people at an open house. I don't know when we'll have Sunday open houses. I don't know when we'll have brokers open.
Well, at least also with virtual showings, you won't have to worry about people stealing your jewelry.
That's right.
So quick question actually comes in here. An email question comes in. I figure since you're talking about this, it's right up your alley here. For Patty, it looks like the rules for showing a house are starting to ease up soon. How much more business do you expect when that happens? Or is the virtual tours enough?
Yeah, it's a great question. I mean, here's the easing. The first 15 days, or really the first week, everything just stopped. And then they realized, okay, if you're an escrow, you have to let an inspector in, or you have to let the buyer measure or whatever. So, but then as of April 1st, we were able to show houses, but not if they were owner occupied. Now, I had a couple sellers that said, you know what, it's my house and I can let them in. So they had to drive by, they had to look at, they had to drive by, they had to look at the videos, they had to like wear mask, gloves and everything else, just as you would a vacant house, and not touch anything. So that's what we're operating under now, which happened May 1st. Now we can show occupied houses, and people are out in droves. I mean, I shouldn't say in droves. People are out. It's a frenzy. The buyer and the seller balance, supply and demand, is pretty balanced the way it always is.
Well, just in general, I'm noticing a lot more traffic than I did, a month ago.
Exactly.
Now, I know some people are going out hiking, go to the beach and all that kind of stuff, but I don't want to say it's business as usual, but it sure seems like there's a lot more people out, doesn't it?
Yes, I think so. Yeah. Yeah.
Patty, I've seen a bunch of articles, posts in the real estate blogs talking about that the high end, a lot of sellers pulled their high end homes off the market, and there seems to be a shortage in that area. Are you? And again, this was a nationwide or California wide. Are you seeing that in Marin and San Francisco as well?
Well, that was initially, but they're back out, and the higher end is selling. And I think that Marin is also going to benefit from people leaving the city where it's close quarters. So, and I think,
interesting.
Yeah, I think all of the suburbs in the Bay Area are going to benefit, or everywhere is going to benefit from that.
Yeah, some house just closed. Some house just closed for $3,600 a square foot. Toward.
Well, that was Stinson Beach.
Yeah,
that was an outlier. You talking about that one?
Yeah, but still,
$3,800 a square foot.
$3,800 a foot. I mean, that is just ridiculous.
That was Phil Lesch's house.
Oh, was it really?
Was it?
Yeah. And I mean, so somebody wanted it. And see, what's happening too is people with really big money like that can just do it. Go over asking. Well, they want a shelter in place. And people are spending more time in their homes, so they're really looking at like, is this where I want to be? I can afford more.
Very good point.
Yeah. But we're
that brings up one thing, because we've got a few more minutes in the segment. This might not be the first and only shelter in place that we're going to experience. This could be something that happens with more frequency. And for example, if there's another SARS like there was 10 years ago, if that happens again next year, something similar, you can bet that the government's probably not going to take the lax reaction that they had 10 years ago, but will probably have the same reaction they've had to COVID-19. And so you're absolutely right. I think where for a while there was this trend towards smaller homes, maybe that's going to reverse, and people are going to go, you know what, we're going to do less traveling, spend less time on airplanes, and spend more time creating a family compound where we can enjoy and relax and feel safe.
Yeah. And also, if schools are going to close, maybe I want a second home where I don't have to get on an airplane, like Stinson or like Tahoe.
Or a second home to just send the kids to.
Exactly.
Absolutely. No, it's interesting how this is all going to flesh out differently. It's the fires are having certain impacts on certainly on inventory, and less than half of the homes that the tens of thousands of homes that burnt down in California in the last 3 years, less than half have been rebuilt, and we were already behind the eight ball in terms of building new homes. So when you look at all these various things, it just bodes well for people investing in their home, investing in bigger homes if they want to do more staycations, and just in terms of home values themselves remaining stable, in spite of the fact that for all intents and purposes we're probably in a recession right now.
And I wonder if you'll get more neighbors to kind of stand up and argue for no more building such and such, because they don't want to have neighbors do things that'll, impact their health potential. You know what I mean?
NIMBYism will never go away.
Yeah, exactly. But it might even be more. Hey, Patty, before we cut to the break, why don't you give out your information in case people have questions about real estate?
Sure. I'm Patty Cohn. That's PATTICOHN at Compass. I'm based out of Marin County, and I'm at 415-722 4842.
All right, we're going to cut to another commercial break. When we come back, we have an email for Mark and Nam that discusses deferments and how to handle those. All right, here's our second trivia question. This is also a fairly easy one. In Disney's Pinocchio, what animal does Pinocchio get trapped inside? Now, Nam, you got to get this one because you have a daughter. Yeah, I
don't think we watched that. I don't want to watch that.
You know, it's so funny. I didn't see Pinocchio until about.
They haven't remade Pinocchio. That's why we haven't seen it.
Yeah.
You haven't seen what?
If they would if they'd remake Pinocchio like they've remade everything else, then we'd probably all have seen it.
Oh, yeah, that's true. It's actually kind of scary, some of it. That's why I waited until I was 56 years old to see it. All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. In Disney's Pinocchio, what animal does Pinocchio get trapped inside of? Stay with us. You're listening to The Best of Investing. We're going to be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hunt, Nam Phan, and Patty Cohen. Second trivia question. In Disney's Pinocchio, what animal does Pinocchio get trapped inside of?
Was it a whale?
A whale, yeah. It's so funny because everyone says, Jonah and the whale, and in the Bible it doesn't say a whale, it just says a big fish. Probably a parrot.
Yeah. And off the air, you were guessing it was a woodchuck.
That's right, because of Pinocchio made out of wood. Okay, Mark and Nam, we got a question here. It comes in from a listener. It says, have you had many borrowers ask for a deferment, and how are you handling those requests?
Yeah, good question. So, in April, we did have an uptick in borrowers requesting deferment or saying that they were going to have trouble making their payments. So, we, like every other lender, you have to take it on a case-by-case basis. And, you can break down a lot of these deferments into different categories. Obviously, one of them being there is a bona fide financial hardship because they've had, because their income was cut off or they own a business and their, source of income is the business, or they work for an employer who couldn't operate. So there's that one category. And then there's people who can make the payment but are being opportunistic.
Yeah.
So you kind of have to look at each scenario and determine whether or not their request merits an actual deferment. And for us, a deferment would be to allow them to not make payments for 60 to 90 days, but add it to the end of their loan, because we make a lot of short-term loans. So it doesn't mean that in 30 years they're going to catch up. It's going to be at the end of 6 months or 9 months when their loan was scheduled to mature, they would make up those payments. Other lenders are actually tacking on those 2 or 3 months to the 4th month and making them due all at once. But we've actually really, in evaluating the deferments we've received, we're approving a fraction of them, because after kind of further diligence and having them fill out, a mortgage assistance application, we're seeing that actually many of these borrowers are actually more opportunistic than really having a bona fide financial hardship. But obviously, for those who are having a hardship, we're either approving the deferment, or if the loan is, if the lender is one of our trustee investors, we're suggesting or recommending to the trustee investor to approve deferment. We're not loan-to-own lenders, so we've always had a history of trying to work it out with the borrowers. And obviously, this is unusual times, and we understand that there's a lot that was unavoidable.
Well, and companies like Pacific Private Money, most of our loans are investment or business purpose. So a lot of people don't realize that, when the government said, hey, we're mandating a 3-month moratorium on payments or deferment, that's really for your conventional bank and Fannie Freddie loans. It doesn't include privately financed or business purpose or commercial loans. So really, those types of loans, the business purpose, the commercial, the investment purpose, you know, that's what Nam's talking about. They're case by case. Now, of course, if their income did get shut off, you know, you can't squeeze blood from a turnip. So, you know, we have to be realistic about it. But we're not under any obligation. And it's kind of funny. We did get calls from a few clients saying, "Hey, I want to get my 3 months, free pass,
Yeah, free
so to speak." And we said, "No, thanks for sharing."
It's the cuss I can't ask for it, you know?
Yeah, I mean, who
Yeah.
wouldn't want to? I mean, if I were told, you know, there would be absolutely no, no repercussions for me to skip my next 3 mortgage payments, I would do it. But I made my mortgage payments the last 2 months because I don't want it to hit my credit, and there's no guarantee that it won't. In fact, I'm probably pretty sure that those people who don't make their mortgage payments to their conventional lender, it's going to show up on their credit report as a no pay.
That's a
It's
good
not.
question. I don't think it is.
It's not.
If they get a formal deferment, you know,
Yeah.
if they just don't make the payment, then I would be surprised if it didn't show up. But if they get a
Well, I'll believe it when I see it, because
Yeah.
credit companies have a habit of making mistakes, as we know,
that's-
because we get a lot of
right.
loans because the bank turned them down for a mistake on their credit report.
There
So
you go.
we'll see
Yeah.
about that.
So even though
And-
Bank of America, I'll just pick Bank of America for a minute.
Let's beat on bank.
Nothing personal to Bank of America, but they're just a big bank. So if Bank of America just happens to accidentally report, these guys just didn't make their payments, even though they have a deferment, go ahead and try to.
I don't think they're going to. I mean, I'll tell you what, official deferment is so simple. Like, I have 6 different mortgages, and I did not do that with any of them, but the way to do it is you just simply go on, like, so Wells, I have like 3 with Wells. You just go on, they preferred online banking. You can't get through to any of them because they're all doing SBA loans. So you just go and click. It's one click.
No, you're 100% right, but I also can see what Mark's saying, because even though you formally do everything correct, things slip through the cracks. I mean, I know somebody who had their mortgage payment on auto pay from their checking account on the 5th every single month. The bank was holding the mortgage and holding the checking account, so there's zero risk in not paying the mortgage on time. Well, for whatever reason, the bank happened to pull it on the 12th of the month and sent them a late notice.
Oh, God.
And it's like, should it happen? No. Does it? Sometimes it does. No, we got a quick minute here. Do you want to give us a quick deal of the week?
You know what? Let me continue on the deferment real quick, because there are a couple of scenarios where the person had a home to sell and they were going to use the proceeds of the sale to pay us off. But when the real estate, froze, then that kind of pushed things out. So they were asking for deferment, but they then backed off because the real estate market kind of picked back up again.
Gotcha.
They were able to get people into their homes, and so they said, you know what? I take it back. I'm not going to pursue this deferment because everything's back on.
I wonder, for those people who have the Airbnbs, I mean, what do they do? That's they're sort of like hotels. I mean, they can't, is that an essential?
One of the deferments we approved was someone who had an investment home that was Airbnb, and they weren't able to make the payments, and we gave them a 60-day deferment. So,
gotcha.
that was a real
legitimate. That was a legitimate one. All right, cutting to our third trivia question here. For which newspaper does Clark Kent work for? What's the name of the newspaper? I know it. All right. Call 888-912-1190. First caller with correct answer is going to win that tanning certificate. Again, for which newspaper does Clark Kent work for? All right, stay with us. You are listening to The Best of Investing. When we come back, Nam's going to give us a deal of the week and let you know how you can invest in the Pacific Private Money Fund, which is currently paying over 7.5% secured by these mortgages. Don't touch that dial. The Best of Investing is going to be right back. Welcome back to The Best of Investing. Actually, it's not the last time for today. We got one more segment, but I'm Edward Brown, your host. Mark Hahn, Nam Phan, and Patty Cohen are joining me. And let's see here. The third trivia question was, for which newspaper does Clark Kent work for?
The Daily Planet.
The Daily Planet. Very good.
Yeah.
Them all. Okay.
3 for 3.
3 for 3, not bad.
What does our guest win today?
Okay, Nam, tell us a little bit about Pacific Private Money, deal of the week. What do you guys do for a living?
So what do we do for a living? We're alternative finance lenders here at Pacific Private Money. We lend on residential, primarily residential real estate, although we do some commercial and some land and ground-up construction. So we do actually everything private money, but concentration is owner-occupied bridge lending, bridge loans. So deal of the week this week is what we call A-paper fallout.
Ooh.
Oh.
A-paper. So what is A-paper? A-paper for us are the conventional lenders. The one you want to go to first when you want to get a loan. And like B of A, let's say something good about B of A this time. No, but somebody who everyone should try to go to A-paper lender first when they want to get their mortgage. But what's happened since March is a lot of A-paper and non-QM lenders, specifically non-QM, we talk about it often on the show. It's the lender between us and A-paper. They're still very low rate loan products. They were in the middle of an application for a loan, and their loan got pulled from them because you know, the institutional lenders pulled back. They said, we don't know what's going on in the marketplace yet. We don't know how real estate is going to be affected, so we are not going to lend you at this point. And they were in the middle of a purchase. In this case, it was a $1.8 million purchase in San Francisco. 72% loan to value, so a little bit on the upper end of what our typical max is, but their income is so strong, their FICO is so strong. This is somebody who we would never have seen 45 days ago or 60 days ago, because they could have gotten rates 5, 4, 3, percent. They're business owner. Their business is still doing well, generating $150,000 a month in income. $1.8 million purchase, 700 FICO, but they couldn't get a bank loan, a conventional A-paper loan. So we're going to fund this loan. It came to us pretty quickly. I think it came to us like late last week, and it's going to close next week. They already have an alt lender lined up to take them out in a few months, but that's just somebody who had to close. They were running out of time, and therefore came to us.
Very good. On the other side, where do you guys get your money from?
You, Edward.
Yeah, there you go.
In addition to Edward.
No. In addition to Edward, we get it from we call retail investors. We get it from people who listen to the show. And you know what? I'll tell you right now, more than ever, we're thankful for what we call our retail investors, because that institutional capital coming from Wall Street is what caused conventional lending, much of the non-QM,
to freeze up. Yeah.
They just said across the board, they just pulled out all of their warehouse lines, all their credit lines, and stopped buying loans from what I was saying earlier, not QM lenders. But we get our money from individual investors who meet the accredited investor status. They can invest up to, or as little as $50,000 in the Pacific Private Money Fund. And to date, we have 200 plus investors, and we're paying them on a distributed basis about 7.5% per month. And we had a fund event about 2 weeks ago, and it was really well attended. If people want to listen to it, they can go to our website and sign up to listen to a recording of it. I think it was really timely. And we'll probably have another one in early June, because I think some of our existing investors who or potential investors want to know, hey, how have things gone since your last fund information session? How's the coronavirus affecting your business? We're busier than ever, so it's exciting. We feel like, in a way, things have turned the corner in the Bay Area.
Yeah, and we said, we talked earlier about how, the concern over California home values is of great concern to us at Pacific Private Money, because we provide the returns we provide, which start out in the mid 7% range on an annual basis, and go up from there. People investing with us make as much as 10%, depending on how they invest. And we've got multiple ways to put people's money to work at Pacific Private Money. We have multiple investment vehicles. We've just launched a couple of new vehicles. Our website's going to be updated in the next couple of weeks, with a couple of those new programs. But the bottom line is that everything we do at Pacific Private Money, all of the investment opportunities we provide, there's one core attribute to those investment products. Each and every one of them are secured by recorded mortgages against real estate. Most of that real estate's in California. So we're very, very concerned, and we're watchful over that. And we have pulled back on our loan-to-value ratios. We were at 70 for the longest time, and now we're at 65. A lot of other lenders have followed suit. In our industry, we've gotten more conservative. We're looking at the use of funds. We're careful about people who are looking to borrow against the equity in their home to rescue their business. Those are gambles that we may not want to take, depending on the situation and the type of business. So so we're very careful. We're very mindful. We're reading the blogs. We're reading the articles. We're listening to the economists. We happen to believe internally that we're going to experience a V-shaped recovery as opposed to a U or an L. But that's not what you hear in the doom and gloom media. The CNNs of the world and the other sources would lead you to believe that due to the massive unemployment that we're going to have the worst recession since the Great Depression. Well, for some people that might be true, but for the economy as a whole and real estate values, which those of us here on the Best of Investing are most concerned about, we just don't see that happening. And look what the stock market's doing. How come the stock market's not going down on a daily basis, like you mentioned, Edward? It's because the public just doesn't believe the doom and gloom media. I mean, they believe that we're going to resume what before the coronavirus was the longest running expansion in U.S. history. I think we're going to get back on that horse again in 2021.
Very good. How do people get a hold of you guys if they are interested?
Go to our website, pacificprivatemoney.com. All one word, of course, pacificprivatemoney.com, or call us. We're in the 415-883-2150, 415-883-2150.
All right. When we come back, we're going to have some closing comments. We don't have another trivia question, but Patty, why don't you give out your information one more time in case people have some questions about real estate and that kind of fun stuff.
Thank you. Yes. So I'm Patty Cohen. I'm based out of Marin County. I'm a real estate broker for 32 years. My phone number is 415-722-4842. And I am at Patty, Patti.Cohn, C-O-H-N, at compass.com.
All right. Stay with us. You're listening to The Best of Investing. We're going to come back with some closing comments. Don't touch that dial. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Nonfon and Patty Cohen. Now, Patty, you wanted to explain a little bit more about this deferment program because there seems to be some misnomer out there about it.
Yeah, I mean, the same way that borrowers, if there's a hardship, the banks will let them defer their payment. It doesn't mean they'll never pay it back. Well, there's also 60 days where a landlord cannot evict a tenant. So first the tenant has to stop paying rent. Well, a lot of tenants, I own several properties and some of them are confused. And although I got rent April 1st and May 1st from all of them, full rent. But there's a misconception that the landlord's supposed to pick up the ball, and we didn't cause this. So they think that many tenants feel like they should just stop paying rent. And then, or that if there's a deferment or that you can't evict somebody for 2 months, it means that you don't have to pay for 2 months. That's just wrong. So one tenant said to me, rather than me doing that, maybe we can make a deal. And I was like, well, here's the deal. You both of you are going to get $1,200 from the government. Both of you are going to get unemployment, and then $600. So you're going to have more, and then you have nothing to spend it on. So rent comes first.
There you go. Yeah,
that's the deal I'll make.
Yeah, as a landlord, the government doesn't suddenly go, oh, sure, we're going to pay all your tenants' rents. And by the way, you don't have to pay for insurance or PG&E or all those costs. And by the way, the heater, if it breaks, don't worry, you don't have to fix it. I mean, Yeah.
Exactly. So yeah, tenants. But I mean, I was a little worried both first of each month, but it was 100% full payment. But just so if there's any tenants out there, that's not how it works. And for landlords, stick to it, because we have to pay our mortgages and our expenses and everything. And if we get a permit, we're going to have to pay that back too. Because I think, we don't have to pay our mortgages for 2 months.
The word defer means later on.
Yeah.
It doesn't mean free.
Yeah.
Unemployment might be free. What's that?
It's called defreement.
Defer, yeah, that's right, exactly. All right. Also, Nam, now real quickly, the Pacific Private Money Fund, you have to qualify for that.
Yeah. So there's 3 qualifications. If that's where you're going, what are the qualifications? It's $50,000 minimum investments. Investors do need to be accredited, so it's $1 million net worth exclusive of your primary residence, or you can qualify an income, which is showing that you on your W-2 that you made at least $200,000 per year for the last 2 years as an individual, or $300,000 as a couple.
And if people are listening and can't qualify that way, you've got your private money loans website.
Right, which is a marketplace where where investors can fund individual deeds of trust for different dollar amounts. You don't need to be accredited to invest in trustees, and you can invest in increments generally from around 100,000 to maybe 200, 250. Our average loan on there is about 800,000 to $1 million. So that's another option for investors who don't meet the accredited investor status. The other thing I was going to say with the Pacific Private Money Fund is that there is a 1-year hold. So that first year, we ask that investors don't redeem during that time period. And afterwards, though, you can redeem. Just give us a call. And if you add to your investments, let's say 6 months into your first year, those additional funds aren't subject to a new 1-year hold. They'd be subject to whatever remaining time period is on that.
That's very friendly, very investor friendly, as they say.
Mark is very friendly.
Yeah. Fast, friendly.
Well, friendly.
I like that. All right. Thank you very much, everybody, for joining us yet again for another good show. Good information. Here's our thoughts for the day. There will always be someone who can't see your worth. Don't let that person be you. And I prefer not to think before speaking. I like to be as surprised as everyone else by what comes out of my mouth. Tune in next week.
We are, Edward.
Yes, we are. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.